InvestPenang has urged the federal government to reconsider the entry ban on citizens of countries with more than 150,000 COVID-19 cases, saying it could have a far-reaching impact on the economy and jobs. Last week, Senior Minister Datuk Seri Ismail Sabri Yaakob announced the government's decision to ban entry of citizens from the US, the UK and Indonesia, among others. InvestPenang Director Datuk Seri Lee Ka Chun pointed out that for foreign direct investments alone, Penang had attracted 15 billion ringgit in 2019 and 6.8 billion ringgit in the first quarter of 2020, 70% of which came from US and UK companies. Lee lamented that with the multiple changes in policies, it has become literally impossible for investors to plan their businesses, therefore risking Malaysia's chances of securing FDIs in the future. Separately, American-Malaysian Chamber of Commerce CEO Shoban Das also agreed that a ban would cost the country millions of dollars at both the business and trade levels. Hence, it is suggesting that the government should instead focus on improving the current immigration communication and expediting processes. Malaysia's new COVID-19 cases jumped to 62 today, the highest daily figure recorded since June 3rd when 93 cases were reported. This was also the highest since the recovery RMCO was enforced on June 10th. According to the Health Ministry, of the 62 cases, 56 were local transmissions while 6 were imported. From the local transmissions alone, 50 cases were recorded from the Benteng Lahad Datu cluster. The LD cluster was first announced by MOH on September 1st when 7 positive cases were found following a screening for inmates conducted at the Lahad Datu Police HQ. All of the 50 new cases involve detainees, and in total, the cluster has 66 confirmed cases so far, comprising 30 Malaysians and 36 foreigners. The country's total number of cases now stands at 9,459, with no death recorded for today. Total recoveries meanwhile rose to 9,124. Iskandar Waterfront is partnering with China's Metallurgical Corp of China to develop 148 acres of commercial land in Skudai, Johor into a smart city over the next 10 years. IWH said in a statement that its wholly owned subsidiary Danga Heights Development and MCC's unit MCC Singapore have formed a JV to develop the land, a project that is expected to yield a GDV of 8 billion ringgit. The first phase will comprise a mixed-use development which spans 38 acres with a GDV of 2.88 billion ringgit. Construction is scheduled to begin in early 2021. This mega project marks MCC Singapore's first major foray into the Malaysian property market. MCC Singapore has developed 15 residential projects in Singapore since 2010 and also has a foothold in Jakarta and Phnom Penh. Airports operated by Malaysia Airports Holdings are gradually recovering, with arrivals improving at an average of 42% since the COVID-19 outbreak, according to Transport Minister Datuk Seri Dr. Wee Ka Siong. We noted that passenger traffic movements in July and August were about 1.3 million respectively, compared with just 430,000 in June. In March, when the MCO started, international arrivals stood at just 2%, while local arrivals were about 3%. We, however, said that while there were signs of improvement, it will take some time before numbers return to pre-COVID-19 levels. MAHB currently manages 39 airports across Malaysia, 5 of which are international airports, 16 domestic, and 18 short takeoff and landing or stall ports. Minority shareholders of Oversea Enterprise are advised to accept the current takeover offer, according to independent advisor UOB Kay Hian. To recap, the restaurant chain had been presented a 30-cent per share takeover offer by Enzo's MD and substantial shareholder Datuk Chai Woon Chat. In its circular to OEB shareholders on Bursa Malaysia today, UOB Kay Hian deemed the offer as fair and reasonable. According to the rationale, the offer price is higher than the estimated fair value per share of 21 cents, representing a premium of 42.86%. It also provides an exit opportunity for the shareholders, especially those holding large blocks of shares, considering the low trading liquidity and absence of competing offers. OEB had on August 6 announced that Chai had entered into a sale and purchase agreement to take up a 62.37% stake in the Chinese restaurant chain operator for 45.37 million ringgit. Chai intends to maintain OEB's listing on the ACE market.